It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Well, we should start things off with a bang. Welcome to 2024. Hey, it's Tyrone Jackson, the wealthy investor, and I am excited today, not only because it's 2024, but it is your chance to think big and go big in 2024. So today's episode here at Trading Stocks Made Easy is all about your thinking and thinking bigger. Some people call it up-leveling your life, your dreams, and of course, your money. So I have a question I want to ask you here at the beginning of 2024. How much residual income do you have coming in your life? If you are a stock market trader, you're a member of my program, the Wealthy Investor Program. For some of you, $5,000 in trading profits every single month is the norm. For some of you, you're dreaming of $5,000 a month residual income because you'd like to get there. I want you to know that if you're a member of WI Trade School or you've ever come into any of my live events, you are on the right track. For another group of you, $25,000 a month is your norm, and you want to try to get to $30,000, $40,000, or $50,000. Here's the good news. There's no limit to how big your account can grow. Why? We're about to come into a market that is very bullish. And in stock market terms, that means that the market overall, or the stocks that drive the Dow or the S&P, are about to deliver good news. You see, on Wall Street, bulls represent aggression and bears represent retreat. So using Wall Street terminology, we're coming into a very bullish period. Now, let me kind of break down the market for you. And even if you know nothing about stocks, just hang out with me for all of 2024 and you'll get that financial education you need so that you can start creating the residual income that you want for the rest of your life. Remember the last 24 months in the stock market, very, very volatile, right? Because we saw during COVID, the United States government pump in a lot of money in the U.S. economy that is 2/3 consumer base. That means if people like you and I stop buying cars and boots and shoes and big screen TVs, theoretically speaking, our economy could collapse, right? Because we don't have a lot of natural resources in the United States. We're really good at buying and selling things. In fact, you can say we're a consumer-based economy. Okay? So if that economy ever slows down, boom, that collapsed. So what the United States government did via the Federal Reserve, as many of you know, was pump in money during COVID while we were all supposed to be at home, right, to stimulate the economy. And they did this in a form of stimulus checks. If you can remember, a lot of businesses got them. Some businesses received millions and millions and millions of dollars. And it was all to keep people working so the government would then have what? A tax base, and the economy would not collapse. Now, just as a side note, we weren't the only government that actually did that. Governments around the world pumped cash flow into the economy, and there are a variety of ways they could do it, to keep their economies afloat. Well, what happened is all of this money that came into the U.S. economy stimulated spending, but mostly online. And it also stimulated savings and investing because a lot of businesses bought buildings and real estate during this time. They didn't spend the money on wages, but they would buy the building and then they would hire people to work on the building. And that's how there was a workaround. Well, all of this stimulus then caused prices, also known as inflation, to rise. Right? So when goods and services start to become more expensive, that is not good for the economy. Nobody wants rising prices at the grocery store or when it comes to gasoline, for example, because when you pump all this stimulus in, we wind up as consumers spending our money on higher prices, right, at the supermarket and gas. So that money comes in and it's going right out the door. So to rebalance the economy, the homeostasis, if you will, of the economy, the Fed started raising interest rates. Now, that means things like car loans and credit cards and adjustable rate mortgages. That interest rate that you're paying every single month goes up and up and up because they were trying to slow down the growth that they triggered. Well, we now know, thanks to the current Fed chair, that they've achieved almost everything that they've wanted except the rate of inflation. And now the Federal Reserve is looking at cutting interest rates sometime within the next 12 months as we head to a more balanced and normal economy. Now, a lot of people go, well, Tyrone, that's really nice that you talk about the economy. What does it have to do with the stock market? It has everything to do with the stock market and your mutual funds and your retirement, because the market reacts to the rise or the decline in interest rates either positively or negatively. So when you are looking at CNN and they're talking about inflation numbers or CPI reports or the amount of unemployment, all of that data affects the stock market and the price of the stocks that you own. Okay? And you may say, well, Tyrone, I'm new to the Trading Stocks Made Easy podcast. I don't know that much about the economy. I don't get it all. Right. That's why I keep saying, stick around with me in 2024. Commit to listening to this show. And guess what? You're going to get smarter and smarter and smarter. So the world's wealthiest people understand these variables that affect their stocks and your mutual funds, because mutual funds is nothing but a basket of stocks that you tell someone else to manage, and they charge you fees because they're really, air quotes here, smart, right? No, you're really smart. Okay, so if we're going into a lower interest rate environment, typically what does this do for the stock market? It causes stocks to rise, because we're in an economy that is being stimulated, and when people get extra money, or the wealthy or the financially educated get extra money, they're always pushing something towards the stock market. So when I say welcome to 2024, and you should celebrate, because we're about to go into a tremendous uptrend where the companies that are publicly traded in a lower interest rate environment can generate more what? Revenue and more earnings. Remember, your earnings are what the company actually earns after all of its expenses. The revenue is like the gross number of income for the quarter in this example, okay? So you're going to get smarter and be able to speak in financial terms and in economic terms, because that's what Trading Stocks Made Easy is all about, that you understand the dynamics that affect a stock price and the exterior influences that cause your favorite stock to go higher or lower. Well, we're coming into an environment where stocks are going to rise. So, do you have a millionaire mindset? Do you have what it takes to think like a millionaire? Not believe everything, but just begin embracing the thought patterns that millionaires do so that you can expect your money to perform. Now, here's the great part. It costs nothing to change your mind about money. It costs nothing to be willing to open in a whole new era in financial success. Just the power of an open mind will draw more financial success to you in your life. So now you have a goal, you have a target, you have something you want to achieve with your money. So let's talk about, if you have a millionaire's mindset, for free, by the way, all you need is my encouragement to continue to learn how in 2024 to think like a millionaire, and you'll expect good things to happen to you financially. So when people say to me who are in my inner circle, Tyrone, what are you doing? I always say, waiting for the next big thing to happen, right? I expect good things, and what do you think happens in my life? Not good things, but great things. And great things are in store for you in 2024. Now, let's talk about saving versus investing. Why do we save money? Well, we're supposed to be earning enough so that we can scoot $200, $300, $400 a week into a savings account, right? Why? In part, in case something happens, we have money to draw off of, a rainy day fund, and in part because, well, we never know when a great opportunity is going to come up, right? But when we're saving money, there's zero risk. our rate of return on the money that we're saving is minimal because there's no risk. Investing, on the other hand, involves risk, right? I'm willing to put more money in an investing account because investing, if I do it well, outperforms my savings rate. Now, don't panic and go, I don't understand all this. You do, you can, you will. 2024 is here. When I put money in a savings account these days, my annual rate of return is probably somewhere around 2%. We're in a higher interest rate environment. Therefore, your bank or credit union is going to pay you a little bit of money, a little bit of interest, just to have your money sitting in a savings account. Well, unless you already have $5 million, 2%, not really a lot of money. It's not really going to make a big difference or impact in your life. So I want to, after I have a sufficient amount of money in my savings, now, if I want to change my life in a big way, I want to put some money towards investing. So I want a Charles Schwab account, an E-Trade account, some place where I can buy stocks, for example, so that those stock prices that are growing are outperforming your savings. So if you're investing, you want your investing to outperform your savings, right? So wealthy people prefer to the performance of their money and the rate of return, right? So let's think about it. If I have money in an investing account and I get 5% annually because the value of my stocks are rising collectively, and I sell all those stocks, I get to capture 5%. I've made more than the money sitting around in my savings. And that's all savings and investing is about. The rate of return on the money that you've actually placed somewhere. By the way, I want to pause here for a moment. What I'm teaching you right now, you should have learned in the 4th, 5th, and 6th grade, but our country is into training the working class, not making people wealthy. So once again, you're in the right place at the right time. Thank you for listening. Okay, so if my investing is rising 5% or more and my savings is producing a 2% return, obviously, I would want more money in investing, right? Great. So when we invest, we're taking a risk. What is the risk? Those stocks may not rise. However, if you're investing in the Dow Jones Industrial Average or the S&P 500, those stocks pay a dividend. That dividend is your share of the company's profits on a quarterly basis. The more shares you have, the more dividend income you're collecting, in this case, every 13 weeks. Now, if my dividend income is higher than my savings, and I'm receiving dividends from Microsoft or IBM or McDonald's, on a quarterly basis, I'm outperforming savings. Why? Because investing, whether the stocks go up, down, or stay the same, look at the investing income in the form of dividend checks that's coming in. So in many cases, I don't need the stock to rise. I just need to collect dividend checks on a quarterly basis. See, when you understand just those basic principles, you can determine how much money is coming into your life on a quarterly basis just from dividends alone. So many of my favorite students like high dividend paying stocks because if the stock doesn't rise, you know you're getting the dividend. Are you starting to get the picture? You should, because 2024 can be the best year ever for you financially if you get that financial education. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Hello, and once again, welcome to 2024, the year of you thinking bigger so that you can live your best financial life. Now, right before the break, I was talking about the idea of saving versus investing, right? Okay, If you know how to invest well, your money that you have in your investments should be outperforming your savings, right? It doesn't mean we don't want to have any savings at all. That would be greedy. There's this balancing act between taking risks and certainty. So let me talk to you about your personality. Are you the type of person who likes to take a lot of risk so that you can have a huge upside annual return? Or are you the person who's like, I'm a little moderate on risk, but I still would like a nice return, but I don't want to take the chance that my investing dollars are going to deteriorate? Totally understand that. That is called your investing tolerance. How much can you stand and still feel comfortable? How much risk can you take and still feel comfortable? You see, wealth and investing is not a one-size-fits-all. You have to know something about your personality. Here's a general overview. If you are in your 20s, you are less risk averse. You're willing to take more of a chance because you presumably have 20, 30, 40 years to make that up if you lose money. The older you get, your risk tolerance actually declines because you're thinking, well, I may need some of that money to live off of when I'm older, so I don't want to risk it all. I just want my investments to rise. Do you get the picture? Great. When you start to think about your risk tolerance, that determines what stocks you are actually going to own. So I'll give you an example. We have a company like Microsoft, still a tech stock, growing, pays a dividend, more risk than, let's say, an Amazon.com, which pays no dividend, but has a tendency to rise over time because Amazon really is growing out their company. I know it's hard to believe and think about Amazon as expanding, but they're still expanding in many, many, many different areas. They don't kick a dividend back to shareholders because they take their profits to feed that expansion. Whereas Microsoft, on the other hand, the company's decided we're doing well. Why don't we kick dividends back to shareholders? That way we're still growing, but we're able to please the people who own the stock or the institutions who own the stock. So therefore, you would expect to see more institutional ownership in Microsoft shares, right? Because they're going to buy tens of millions of shares because they can calculate their rate of return on the dividend. You would expect to see less institutional ownership in Amazon because in the absence of a dividend, if I buy 10 million shares, I'm not getting a return. I'm just betting on the stock price rising. Does that make sense? All right. So if wealth is not a one-size-fits-all, in your research, in your study, seeking this financial education, you have to find out what stocks are right for you because you're going to want some kind of balance between dividend payers and non-dividend payers. And here's the secret in the stock market that they don't want you to know. Is that you get to choose your level of risk. So every month when you make a deposit into your trading account, you get to decide what dividend-paying stock you want to hold on to or own more of. Now let's talk about the difference between investing in a company and trading in a company. There are some stocks that I trade. I'm willing to buy and sell them very, very, very quickly, right? And there are other stocks that I'm willing to hold on to for, let's say, a 2 to 5 year period because I can see the revenue growth and that their shares are going to be higher than where they are right now. So what kind of trades can I place? Well, the easiest trade to place is a volatility trade. Hey, I'm going to buy these shares of XYZ, which has great revenue growth. And as the stock moves up $1, I'm going to sell my shares, buy it back, sell them again, buy it back, sell them again. And we call that in the Wealthy Investor Program volatility trading. Now, you can make a lot of money volatility trading, but it is a technique. It's not hard. You have to study. In fact, my new 2024 volatility trading course, we called it Crazy for Volatility, is going to be released within the next 30 days. So make sure you go to thewealthyinvestor.net. Download the free ebook. That means you get the invite. And the only people who are going to know about this course are people on our email list, right? Because if you take the free ebook of my favorite stocks, you're really interested in trading. So head over to thewealthyinvestor.net, get the new ebook on the 5 stocks that I think are going to rise, and you'll be eligible to take this Fast Money course. It's really fascinating. We're putting it together now. I'm having a ball teaching it. because it's a great course and a great way to start off the year, and I want you to be in that course. You really love it. Okay, so if I'm buying, let's say, 500 shares of a company, and I sell those shares when the stock moves $1, I'm actually going to use it as a programmable trade inside my account, right? Every time XYZ stock moves $1, I make $500. Now, I'm out living my life, right? I'm not sitting at a computer like a day trader. All my trades are programmed in. Well, if I can catch that dollar move twice a week on those 500 shares, I just made $1,000 that week in the stock market, and I wasn't even sitting at my computer. Do you get that? I'm out living my life. That creates $1,000 a week income stream, or $4,000 a month. Now, if I am doing that in my account, and let's say an insurance company is doing the same thing, except they're buying 1 million shares, and they're trading the stock when it moves $1, how much are they making? $1 million per trade, or $2 million per week, or $2, $4, $6, $8 million per month, right? Because they have the buying power and the skill to do that in the stock market. Now do you see why 2024 is your year to think differently? Because if institutions are making that kind of money, can't you ride alongside them with the shares in your account? Of course you can. It's totally legal. Anyone can do it if they know how. That's what getting a financial education is all about. And what I try to do with my program is break down all of the fancy Wall Street lingo so you can understand how to place these trades with predictable results. Do you get it? Right. So financial education is not about learning what really goes on in Wall Street. It's also about learning about trends, what stocks have high volatility, what stocks pay dividend, so you can simply take advantage of all of that movement in the stock market. And what I think is so fascinating is this era that we're in when the whole world is digital and you can listen to a show like mine for free and start that education. That is exciting, and we've never had a period like this in the entire world. So this show is heard by people all over the world, and many of them become wealthy investor students. Of course, I want the same for you. When we come into a market that is inherently bullish, I want you to be able to take advantage of that. I am in the business of helping you change your life. I'm here doing the show, but you have to take the actions. So far, we've talked about this whole idea of being in a consumer-based economy, what's going on in the market right now, dividend-paying stocks versus non-dividend-paying stocks, getting a financial education, and choosing based on our risk tolerance the stocks that we like to hold or trade. Now, here comes my favorite part of this whole show. I don't ask much from you as somebody who listens to this podcast on a regular basis, other than if I help you make a lot of money with the financial education in the stock market, I only ask one thing, that you help one other person, your parents, a family member. Put some money in a brokerage account for your niece, your nephew, your child, someone in your family. Why? Because if we're investing in the stock market and we know which stocks to choose that have a bright future, we're actually passing on wealth to the people who we help. So, for example, I have friends, when their children are born and they get a Social Security number, not the first thing they do. The first thing is they take care of the infant, but they will run to open up a brokerage account and buy shares either in an index or individual stocks that pay high dividends. Why? That little infant, that sweet little life that's just come in to the world, into the earth plane, doesn't know it, but they're going to be enormously wealthy. Why? Because if they bought Microsoft stock today, what will it be worth 20, 22 years from now? Right? So because you had the right education, you are empowered to help change, influence, and shape someone else's life financially, because all you did was buy stocks when they were young, when they were little, when they were small. And those stocks can be sold at a later date. These are powerful ideas. Listen to this. Imagine if you started trading, generating income for yourself, taking a little bit of that income and putting into an account for your daughter or your son. Well, if your daughter or son is holding dividend-paying stocks, they start to get dividend checks when? every 13 weeks. You ever see a 5-year-old's face when they receive a dividend check from Microsoft? They don't care. They're kids. It's money. They're not really into it. But when they hit around 16 or 17 is when the magic starts, because that's when kids start to want higher-priced items. You can say as an educated investor, well, maybe we'll get that iPhone when your next dividend check arrives. Therefore, you got your iPhone from Wall Street. It's powerful. It's powerful when you can help other people by taking small, simple steps. So I have to reward you for listening to this show week after week after week, because as you think bigger, you'll get bigger results and you'll be able to help the people who you care about. You'll also be able to take, for example, your parents' portfolio and go, where's your dividend income that this mutual fund is supposed to be giving to you on a regular basis? Well, we don't really get dividend income. You know what? Can I take a small portion of this portfolio? You'll start getting dividend checks within 13 weeks, mom and dad, so you won't have to worry about groceries. You can take a vacation. Well, where did you learn all this from? Well, this is really handsome, charming, funny, interesting guy named Tyrone Jackson, and I listen to his show for free every single week, and I've become a wealthy investor student. Your parents, if they don't know anything about money, will go, okay. Just don't lose our money. Don't worry, Mom and Dad. I've got you in S&P and Dow Jones stocks. Therefore, your quarterly income is guaranteed, and these are stocks that are in a strong upward trend, and so on and so forth. You see how powerful a financial education is and can be? Who are you to think small? There's no payoff in thinking small and hanging out with other people who think small. This is your year to think big, to get your piece of the pie, to get in on Wall Street at a time when it is rising. You know, everything in the universe happens in the right place in the right time. And you and I are meeting right here at the right place in the right time in your life to change your mindset so that great things can begin to happen for you. Now, if this podcast has helped you, share it with someone else. It costs you nothing to share it on Facebook or Instagram, because you never know in the process of sharing who you're going to help and who you are meant to help. Try it. People make New Year's resolutions all the time. Make a New Year's resolution to change your mindset and to share the things and experiences that make you feel good, that get you excited and help you live a bigger life. I'm here every single week to get you excited, keep you focused and motivated so that you can have the financial life that you deserve. Let's make 2024 your best financial year ever. I'm Tyrone Jackson of thewealthyinvestor.net. I'll see you over on the website, and get ready for that volatility course that's coming your way. See you soon.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button, and you'll automatically receive our next episode.